Ladies and gentlemen, welcome back to the channel. This week could be a crazy one. We're going to get into all of the economic data coming out this week, the earnings, which there is an earnings that is going to move AMC stock huge. We're going to talk about that for this week ahead. I also want to go over a technical overview of AMC stock and where I think AMC stock is going to go, aka a price prediction. So let's go ahead and jump into it. Hit that like button and subscribe to the channel. Remember, this video is not financial advice. Do not buy, sell, trade anything based on what you hear in this video. These are only my opinions, and my opinions can be pretty outlandish sometimes. I take pride in, being right and being wrong, being, willing to make a prediction. A lot of people are unwilling to make a prediction. You'd be surprised how many people are unwilling to make a prediction based on, just not wanting to be judged and being wrong. I don't give a crap if I'm wrong or if I'm judged. Just my opinion, okay? I might trade off this information. I might not. Who knows? If you guys want to come join the trading community, link down below in the description of this video, but neither here or there. Let's go ahead and get started with some of the first things that I want to point out. Now, this is, just a head scratcher, okay? This comes from the Short Bear. He says, while we consolidated over the past week, the IWM saw its biggest outflow in 2 years. I will never understand why investors do certain things. Add for 2 years within a downtrend, cut once it gets constructive. Like, that's exactly the point. Like, you bought, there was, a lot of inflows for the last 2 years to IWN, believe it or not. Some, days were really big for inflows. And then, last week you had 2.21 billion worth of outflows to IWM. If you guys don't know what IWM it is the ETF for the Russell 2000. Okay, so it's small mid-cap companies. Now, this was the largest outflow since October of 2021, basically when everything rolled over. Now, there is a little bit of good news here, I guess, if you want to look at, things abstractly. Typically, when you do see a lot of outflows, it's during periods of times that are kind of sideways in trading, but you tend to actually rise after you see outflows, right? Like this period, July of 2022, you've seen a lot of outflows if you just connect a straight line up. You've seen a lot of outflows here. IWM was trading near the lows, right? And you've seen a face ripper rally. This was the August rally of 2022. So in that light, this could be seen as a big positive, potentially for a continued rally higher. But it's really just, mind-boggling because the Russell is really where you want to put your money. That is in high quality, household names, preferably companies that have been just providing better earnings over the past 2 years. Those are the names that you really might want to be buying now. But yet you just seen a huge week of outflows. It really doesn't make a whole lot of sense. It just makes you scratch your head. Like, what do investors think? Like, what supports you selling small cap stocks when we're expecting now 5 or 6 rate cuts in 2024? And the average consensus is we're not going to have a recession next year. I'll tell you right now, the odds of a recession next year are very low. Rates are going to call all the way down before we head into a recession. Because why? It's political, right? Simple. Very political. You won't win a re-election if you are the president if you're in a recession or close to one. It just won't happen. It's never happened before. Because people vote on their pocketbooks. They vote whether or not they have jobs. So that's a big problem. I think rates would go to 0 or close to it before you actually see a recession next year. So, we'll ultimately have to see. But definitely wanted to share my opinion on that one. Now, Fundstrat's Tom Lee has this chart that looks like a 5th grader drew it. But nonetheless, he has 4 major events here. October PC, that came out on November 30th. That came in good. Tom Lee expects the markets might sell off into the November jobs report. That's going to be this Friday. That's your biggest set of data. We'll go over the calendar here in just a moment. He says the markets might rally into maybe Tuesday's CPI report, or maybe hit a low by Tuesday's CPI report, but be pretty volatile until next Wednesday's FOMC minutes or FOMC press conference, which is December 13th. And then you could see a FOMO Santa Claus rally for the S&P that could send the S&P to 4,800. The S&P is right at about 4,600, technically for 59 on the SPY, I believe. So like right under 4,600. It would be a rally of about 5% from now until the end of this year to get the S&P to 4,800. That's what Tom Lee expects. We'll see what ultimately happens. Now, we do have a bunch of data coming out this week. Your big data is on Friday. So that's the kind of crappy part about all of this. A lot of the times your payroll report, your government one, comes out on like a Tuesday or a Wednesday. This time it's on a Friday. So if the markets rally into Friday, it doesn't matter if the markets don't like that jobs report on Friday. Stocks are going to fall. And then the whole week might just be a muted week, a sideways kind of week, maybe a down week. Vice versa. If stocks sell off into Friday and that jobs report is good and gives the markets a bullish reaction, well, the whole sell-off this week didn't mean crap. So Friday's going to be a big day. Don't look into, what happens Monday all too much. We don't really have any data, some bond auctions, secondary data, Japan inflation data, nothing too crazy. Tuesday, you're going to get ISM services PMI. That could be important. You're expecting 52. Last month was 51.8. So that would be a little bit more service PMIs, a little bit more service activity. That might be actually seen as a decent thing right now, just because we want to see the economy hold up, but you don't want to see it come in too high as well. You are also going to get the JOLTS job openings. You're expecting 9.35 million. Last month, we came in at 9.55 million. We were under 9 million for that report in July. If you go under 9 million, that's probably going to be seen as a good thing. And I think that's a possible thing. A lot of secondary data that's going to come out in regards to the job market as well as the services PMI. On Wednesday, not too much is going to be happening. You do have some exports, imports numbers, unit labor costs, things of that nature. You do have the ADP employment change for November as well. This is the closest thing to a jobs report, the government one we're going to get on Friday. So we might get a little bit kind of a reference on what we could expect. You're expecting 128,000 job ads. So that would be up from 113,000 last month. So, it's expected to be a little bit better. But that's basically it for Wednesday. For Thursday, you're not really going to have much at all. And then on Friday, that's your big data. Your unemployment rate for November is expected at 3.9%. That would be the same as last month. You came in at 3.9% last month. Non-farm payrolls came in last month at 150,000. You're now expecting 180,000. So 180,000 is okay. 160,000 is roughly your historical average. So that would be okay as well. Anything under 100,000, the markets might start to say, are we heading into a recession? So under 100,000 is negative. Probably bad news. Above 170,000, probably bad news as well. 180,000 might be seen as slightly bad news. We'll have to wait and see. But you don't want this number coming in too low also. That's also going to be bad news. Your Michigan Consumer Sentiment Survey is also going to be a big one. That comes out at 10 o'clock in the morning, I should point out. Your non-farm payroll report, your unemployment rate come out at 8:30 in the morning. Your Michigan Consumer Sentiment Survey is expected at 61.8. Last month was 61.3, so that would be an improvement. That doesn't matter. 5-year inflation expectations are what matters. Last month, you were at 3.2%. That was the highest we have seen in over 15 years. Well, now you're expecting this to hit 3.3%. So uptick 1 point, a tenth of 1% from last month. This is weird because 5-year inflation expectations are going higher for inflation, yet inflation is hitting a new 2-year low. Doesn't make a whole lot of sense. We definitely want to see this number come in lower than last month, like 3.1% or 3% would be preferred. 5-year inflation expectation is going to be the most important data report coming out after the payroll reports. Also, 1-year inflation expectations, those could be important. Kind of the same things going on here. Last month, you were at 4.5% for 1-year ahead inflation expectations. And now for December, you're expecting 4.5% as well. I don't really know. I mean, the way we've kind of seen these numbers is inflation expectations have been rising. So that is a possibility again. Now for earnings this week, you're going to have some important ones. Monday, GitLab, Joanne. Tuesday, pre-market, Neo, AutoZone, Smuckers. Tuesday, after hours, MongoDB, Centennial One, Toll Brothers, Dave & Buster's, Asana, Stitch Fix, Box. Wednesday, pre-market, Ollie's, Campbell's. Wednesday, after hours, C3 AI. GameStop, Chewy, Viva, ChargePoint. That's pretty much it. Thursday pre-market, Dollar General. That's one that could move the broader markets if Dollar General has really good earnings and the consumer is doing okay. That's going to be great news. If the consumer is doing bad, that's not going to be great news. Personally, I own a little bit of Dollar General, so I'm interested to see what they say. It could be a broader market mover based on that data, that insight from the consumer. Broadcom, chip company, done very well over the last 12 months. That could also move the markets because it could move the chips, which can move the markets. Lululemon, DocuSign, Restoration Hardware, Smith & Wesson, Vail Resorts will all be reporting earnings Thursday and after hours as well. But that big one is GameStop on Wednesday. You've seen GameStop has started to do pretty well recently over the past couple of days, really the last week. That could be setting us up for a beat to earnings. GameStop is still trading way, way low relative to, where maybe the stock should be trading, I guess, considering we're expecting so many rate cuts. I expect a positive reaction from GameStop's earnings. I think they're going to beat the earnings estimates, probably raise guidance as well, come in just better overall. Probably going to be positive for AMC as well. AMC on Friday was up 3.16%, up 0.15% in after hours. It's possible this week AMC could make its way back to the $9 range. That's what you've seen on Friday. You had about 80,000 calls at the $9 strike. This is looking at the whole option chain. So this could be options for 2026 too, right? This could be options for this week. You kind of get the idea. If we take a look at this week's numbers, the $7 call, you got about 12,000 for open interest, about 11,500 for open interest at the $7.50 call, and 11,300 for open interest at the $8 call. The $9 call has about 6,300 for open interest, and the $8.50 call has about 4,000 for open interest. So there is quite a bit of option activity just outside the money. $7 per share is like, what? 13 cents away from where we are now. It's not going to take the craziest move higher to break above 7, and that could be about 1.2 million shares, 1.5 million shares, 1.3 million shares that would need to be bought in AMC stock. That would be sizable, and that could send the stock all the way up to about $9 per share. That's my personal opinion. That's possible this week. But again, would I be surprised if this week was a bad week and AMC hit $5 per share? No, it's not like that would take me as a big shocker. But I am expecting a positive week this week for AMC stock. If you look at the RSI, that is at about 37, also under neutral. I mean, on the oversold side. So definitely could see a bounce there. And the MACD, pretty neutral overall, which I think is surprising considering this down movement we have seen from $11.50 or so down to under $7 per share. So let me know what you guys think about this down below in the comment section. Hit that like button and subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.